price is stagnant to going lower, but yet it's hard to get a hold of. I know personally that orders we place for clients, because really nothing's in the store, hardly anything's in the store. Someone has to come in and sell us product. We are able to create two-way markets because there are 4 stores in 2 states. So we do have that unique advantage, but at the same time, no one's coming in to sell. The only one coming in to sell is someone that is maybe trying to chase other markets, emotionally driven, or simply they're going broke. So it's hard to get any product, and any orders that I do place from like 3 weeks to undetermined. And the premiums on these things to acquire, to sell, can be anywhere from $4 to $8 over. You have individuals of large wealth that are coming in or structuring deals with us to sell 10-ounce kilo gold, large positions, because maybe they have an apartment complex they need to keep afloat or something like that. So why the price is going down is it's very interesting. I mean, you do have short positions on gold and silver. Bets are against this product are being removed. That's something I found back in March of 2020, when everything just pretty much got eviscerated. Silver opened up, if you remember those days, it opened up at $11.05. Dow was down, open 4,000 points. Within 2 days, the open interest of silver on global mining went from over 160% down to the low 80s. So a strong position that has been kind of moving this market or controlling this market is now gone. At some point, this market is going to absolutely take off. My fear is with the production shortage, mines being reduced in capacity due to COVID, when everybody realizes that they need an insurance policy, it's not going to be there. I think we're in a reset globally. The dollar is being removed as the dominant yield. This may take a little bit of time, but the framework's there. If things were to go to hell tomorrow, it could happen. So that's what I see. It's a tight market. I don't see a ton of suppression on it, and what little suppression you get, it's not having a huge effect, right? So everybody needs to be patient, load up, and you're going to be rewarded. The mining extraction of silver coming into March 2020, the outstanding bets or opens against interest against that totaled 160% of what was coming out of the ground. And that was removed down to the low 80%. Honestly, where I think the price can go, you'd think I was just out of my mind. So I won't put a number on that. But to say that the nominal high of $50 won't be breached many, many times over, I think is very naive. And by unattainable, it's a term called backwardation in commodities. So what that means, it means shortage, and it happens all the time. So let's use silver as an example. Silver contracts are traded in 5,000 ounce lots. So let's say you as a person, you Jake Ducey, you have 5,000 ounces of silver. You see silver trading at 26, 27, you know you can get a contract right around that price, take delivery of it. Why wouldn't you call someone like me, negotiate 31, 32, 33 for your silver, go back in and buy a contract and take delivery, and keep the delta, keep the difference, right? You make good money. Well, you simply don't do that because you don't trust that you'll ever be able to reproduce that position, which means that on top of typical manufacturing spread and dealer cost, you're having to pay, in my opinion, a bribe to get it out of someone's hands, because what's coming out of the ground already has firm contracts on it, and what's above ground is in tight hands. So you got to bribe that thing out. So what this thing, I think this looks like, I mean, if you're already paying anywhere from 33 to 35 and above, depending on the product, when the price is here, 26, 27, when we're at 50, you're going to pay me 80. When we're at 100, you'll pay me 2. If silver gets to 1,000, you won't get it. For the most part, now, your spot price or your market price is going to rise to follow, but still at the same point with what's going on, and it becomes more evident that the world currencies are being reset, you're going to have this go into even tighter hands, right? And then you have this new green initiative where we got to change all these cars, EV, all that stuff. That takes silver. I mean, it really does. And where's the preferential treatment going to go on contracts coming out of the ground? It's going to go to the industry. There just simply isn't going to be enough. I know dealers in mints, and I've talked to them personally, they are scrambling to buy as many 1,000-ounce silver bars and 100-ounce gold bars, and even try to get 400-ounce gold bars just to refine down and make the smaller junk for you to buy. The price going down, in my opinion, like let's go back to Reddit. They tried to squeeze SLV. The shot silver went from about 26 up to $30, and then they raised margin requirements. So every little effort is being put on to manipulate this price a little bit down, but there is a floor on it, in my opinion. And I think we're seeing roughly that floor, mid 17 on gold and roughly the 25, 26 on silver. I don't expect a massive whirlwind below that. So this is it. I think we're here. There's a lot of ammunition that has been spent on trying to manipulate this price that just simply can't be covered anymore, bottom line. And at some time, the piper has to be paid. So you still had some shorts last week that were piled on, but they all got removed. So the short answer is, I'm not looking at the spot price. I'm looking at the price to obtain this stuff, because that is the true market price. When you have an abundance of currency being printed like mad, you will get price distortions by all means. You can see it in the equity markets. You can see it in the real estate markets. This will matter at some point in silver, and I think it's going to come very, very quickly. And the problem is once this price goes and breaches 30, you're going to see 50 within a matter of weeks to months. And by that time, it's almost too late. When people realize that they just have run out of time and they need to know someone like me or find a dealer or get their hands on metal, they missed it already by months. So I try not to look so much at that spot price. I don't trade the futures. I don't trade the SLVs. I don't trade the ETFs. I hold physical bullion. I deal with physical bullion, and you're seeing the true price is 33 to 35. It's fundamentals of supply and demand. You can look back through recorded history. Let's take 2008 to 2011, for example. Silver went over 5 times higher. Gold went about barely 2.5. And the reason being is you got a silver market size above ground, including everything that we have, silverware, jewelry, all that stuff. The market size is estimated roughly at current price, which will be discovered higher. It's about $50 to $70 billion in size. All right. And the price of silver is, for the most part, affordable or attainable, at least at 1 ounce for, I would say, the majority of the world. And you have a gold market size, which is, this thing is roughly between a $9 to $11 trillion market, and the price point for it is out of reach for the majority of people. The benefit with gold is you can put just a stack of wealth, right, in a shoebox. Silver's a lot more, as you know. So when people wake up and they find out that their 401k is down 10% on a Monday, 50 on a Friday, and this will happen, I become very popular. They rush in, they buy silver, it depletes the supply, silver moves at a greater ratio to gold percentage-wise, thus make gold more affordable in silver terms. In 08, the exchange of gold to silver, if you took gold's price and you divided silver into it, you're going to find that exchange. Think of it like a currency. Silver's currency is going to appreciate above that of gold. In 2011, it only took 31.6 ounces of silver at the spot price to buy gold from 88. So silver obviously appreciated more. Further note, where the opportunity lies for the coming market downturn in real estate and equities is in 08, the same time the exchange of silver to gold was 88 to 1. It took 20 ounces of gold to buy 1 share of the Dow. I'm expecting this ratio to go to possibly 10. I think you could have 10 to 20 ounces of silver will equal 1 ounce of gold. I think a half ounce of gold will equal 1 share of the Dow.